join. We're excited to go over a great topic today, which is self-employed retirement options at Vanguard. Just want to review some of those options and compare and contrast with our solo 401k plan, just to educate our community on that topic. As always, this presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. If you are on our YouTube channel, please feel free to chat over questions, or if you're on LinkedIn or the StreamYard or even Twitter, we've got time to field questions. We want to use the time also to answer the questions or topics that you want to discuss. If you are on YouTube, if you could be so kind to also like and subscribe or share with those that you think might be interested in this topic. We go live every day. We go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern. Then we're back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. This afternoon's topic is going to be about how it's still possible to open up a solo 401k for 2024 and make mega backdoor Roth contributions. So we've got a wealth of topics we go over. So if you subscribe, you can get the notifications. You can join these daily live Q&As. We also have a lot of great topics on the agenda. We're going to be talking about, for example, solo 401k strategies in terms of how much income you need to maximize contributions, mega backdoor Roth solo 401k deep dives. For example, that's what we did last Friday. So again, we appreciate the chance to discuss these topics. So let's jump in. Let's take a look at Vanguard's website. So for example, if you go to their website and look at options for self-employed individuals, you've really got three options presented there. The last option there is for multiple participants. So we're looking at one person, owner-only businesses. So self-employed individuals with no non-owner, non-spouse employees working for them. And Vanguard left the solo 401k industry last year. They sold their accounts to a census. So if you go to their website now, if you want to sign up for a solo 401k, what they call an individual K, they'll just route you over to a census. They do present a couple of other options, though. One would be a SEP IRA, as well as a simple IRA. But it becomes clear pretty quickly for those that are looking to maximize contributions that those are not going to be ideal. I mean, even just looking at the comparing the options here on Vanguard's website, you could see that you can clearly make much more contributions to a solo 401k, which is their individual K, because you're able to make that employee contribution all the way up to the employee limit, which is now $23,500 for 2025, plus even more if you're age 50 or older, because you can make $7,500 if you're age 50 or older, or if you're age 60 to 63, you can now make super catch-up contributions. But then on top of that, you're able to make employer contributions. And then if you have a plan like ours, you can make what are called after-tax or mega backdoor Roth contributions. So if you compare from a contributions perspective, you can see clearly that the solo 401k is going to be a better option. From an investment options perspective on their website, they're all limited to Vanguard funds. If you look at the fees, for example, it's going to be $20 per for each mutual fund, as well as $20 per participant. So now let's take a look at our contributions calculator. We ran a quick calculation just based on someone that's age 45 with a business that's taxed as an S corp and they have $100,000 of wages. With these bar graphs, you can see quickly that a solo 401k, just again focusing on contributions, right? Because one of the main purposes of a 401k is to be able to save for retirement. So you can see with this bar graph, this is representing a solo 401k, whereas here is a simple in the red and a SEP in the green. You can see clearly how much more you can contribute to a solo 401k. So from a contributions perspective, a solo 401k definitely wins out. And then the question becomes, okay, well, what about a census's or Vanguard's, because they take you over to a census's individual K versus the solo 401k that we offer, right? So with the Vanguard solo 401k, where they really take you over to a census, Number one, they're not going to allow for mega backdoor Roth contributions. So with the mega backdoor Roth contribution strategy, the individual is able to make contributions all the way up to the overall limit, which for 2025 is $70,000, plus again, additional contributions if you're age 50 or older, where those funds will end up in a Roth account. Whereas the Ascensus individual K that's offered through Vanguard doesn't allow for those mega backdoor Roth contributions. Investment options, again, we saw on Vanguard's website, they're limited to certain Vanguard mutual funds. Whereas our solo 401k plan is open architecture. It allows for a wide range, right? We help our customers open up accounts at the bank or brokerage of choice. For example, Fidelity, Schwab, where the brokerage accounts at Fidelity and Schwab are going to have the same type of options you would have with an IRA at Fidelity and Schwab. In other words, stocks, bonds, mutual funds, certificates of deposit. And on top of that, our plan allows for alternative investments. So crypto, real estate, private placement, private stock, precious metals. So all of these are available options with our plan. Whereas again, with Vanguard, it's going to be limited just to a certain list of Vanguard mutual funds. The ability to take solo 401k loans, right? That's where the individual can withdraw money from their 401k. And if it's properly documented as a loan and paid back according to the loan terms, it's not going to be subject to taxes or penalties. It could be for an emergency purpose or really any purpose. It doesn't have to be an emergency. So the Vanguard solo 401k plan that they really offer, where they take you over to a census, doesn't support solo 401k loans. Whereas our solo 401k plan does. We prepare the required loan documents as part of our service for no additional charge. And then that gives someone that flexibility, that optionality, if in the future they think they might want to be able to tap those funds for whatever purpose. From a fee perspective, again, the Vanguard solo 401k plan, their individual K that they take you over to a census, we saw on the fee page, it's $20 per participant plus $20 per mutual fund. So if you got multiple participants, like a husband and wife, and or individuals investing in multiple funds, you can see that it'll add up very quickly. Whereas with our plan, our customers can open up accounts at the bank or brokerage of choice. We help our customers. We're very hands-on in helping our customers open up accounts at many different institutions. The top brokerage options are going to be Fidelity and then Schwab. Those brokerage accounts that are set up, say at Fidelity and Schwab, number one, they're going to allow for a wide range of investments. Number two, Fidelity and Schwab doesn't charge anything to open up those accounts. There's no maintenance fees. They even have free online trading. And there's many, many funds there where they're not charging per fund the way that Vanguard is effectively doing through their individual K offering. So instead, we just charge a flat annual fee of $125. Moreover, as we'll see as we go down this list, our plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. So that's going to more than cover our fees for the first 7 years. So effectively, our plan is free for the first 7 years. Again, we talked about alternative investments. That could be the real estate, notes, cryptocurrency, etc. Compliance support. So for example, once the value of the plan exceeds $250,000, there's an informational tax filing requirement, which is referred to as a Form 5500-EZ. So we handle that Form 5500-EZ preparation as well as filing under the electronic filing system as an optional free service for our customers. In other words, no additional charge. And that's just one example, right? There is also, for example, the 1099-R. So if you're making mega backdoor Roth contributions, that's going to ultimately require that a 1099-R be issued. Again, we handle that as an optional free service for our customers. Could be the loan documents, could be fielding questions, right? We're fielding questions every day from customers, educating them on the solo 401k rules, whether that's contributions, investments, etc. We started to talk about the tax credit. So our plan will make the self-employed business eligible to claim $1,500 in solo 401k tax credits. That's $500 per year for 3 consecutive years. So for example, if someone restates an existing plan here in 2025 or opens up a new plan in 2025, they'd be able to start claiming that $500 credit for 2025 and then for 2 more years. It's a tax credit, not a tax deduction. So it's going to be a dollar for dollar reduction in the individual's tax liability. So the impact is tremendous. As I mentioned, it more than covers our fees for the first 7 years. We charge a flat fee structure. It's $650. That includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee. That covers the second year. For example, if someone signs up here in February, it's going to be due next February to cover the second year. And then finally, as we mentioned, whereas with Vanguard, the account's going to have to be at a census. With our plan, our customers are totally free to open up accounts. We've helped our customers open up accounts at hundreds of different banks, brokerages, cryptocurrency and alternative investment platforms, etc. All right. Well, thank you so much for listening as we went through that topic. Now let's go to the questions. And again, if you're on YouTube or LinkedIn or Twitter, feel free to chat over questions. Please please subscribe. If you're on YouTube, then you get notifications of these daily webinars. We go live twice a day, so you can jump on and ask questions or see what other folks are asking. If someone's self-employed business is a single member LLC and is thinking of making an S Corp election for 2025, what changes would they need to make for their business solo 401k after this S Corp? So that's a great question. It's not an uncommon question, right? A lot of times individuals will start out as a sole proprietor, maybe not even have an entity, or maybe they'll have a single member LLC. And then as their self-employed business matures, they may want to elect S Corp status. So it's not going to impact the 401k in terms of the investments or the accounts, right? It's really going to be a document update. So that plan document is going to be updated to reflect the fact that now the sponsor, the self-employed business, in other words, is now the S Corp. So we will handle that update as a service for our customers. We charge a one-time fee of $300 to do that amendment because we need to redraft the documents. But again, it's not going to impact the accounts. It's not going to impact their investments. It's going to be a document update. Now, it would also impact how their individual determines how much they can contribute. For example, if someone's business is taxed as a sole proprietorship, right? Let's say it's a single member LLC that's taxed as a disregarded entity, where that individual is reporting their earned self-employment income on Schedule C of their taxes. In order to determine how much they can contribute, it's based on their self-employment compensation, where that's equal to line 31 of Schedule C less 1/2 of the self-employment tax. Whereas if the business is taxed as an S Corp, the ability to contribute is based off of the W-2 wages that they receive from the S Corp. So from that perspective, the calculation will change, but we can definitely help that person understand how much they can contribute and how the contribution rules will work and apply to their S Corp going forward. Great question. How long does the process take to roll over from another 401k account, no longer with the previous employer? That's a great question. And we are helping customers transfer money from pre-existing retirement accounts every day, as long as they're eligible to be transferred. It could be from a former employer plan or a non-Roth IRA. Now, the process is going to vary. As you might imagine, we've helped customers transfer funds from hundreds of different places, and we track that experience, that knowledge base that we built up to make the process easy for customers going forward. So it's very likely, for example, that we have experience helping other customers before transfer from the same place that someone now is looking to transfer over. So that'll make the process easier for that person. Now, all things being equal, I would usually budget about 2 to 3 weeks. And the reason for that is, first of all, the administrator of that former employer plan is usually not going to be in a rush to transfer the funds out. Number two, they're going to have their own processing times, right? Then number two, the funds are going to transfer by check. So you have to account for time for the check to be mailed, then time for the check to clear into that new account for the solo 401k? Great question. Thank you so much for the good participation. We'd certainly appreciate it. Please continue to engage, whether you're on our YouTube channel or you can come to our community. We have forums where we have folks posting questions. We got thousands of forums. It's a great way to see what other people are asking about, or come and ask your own question. Again, please subscribe, please like, please share. We appreciate that you participating and engaging. It'll give you a chance to get the notifications and come to these sessions live. If someone already made a lump sum contribution to the 401k for 2025 as an employer pre-tax, and assuming that their salary under their S corp could be too low for the amount of the employer contributions they made, how would they correct this? Any way to retroactively change employer pre-tax contributions that were converted to Roth to voluntary after-tax contributions that were converted to Roth 401k, or they need to do a corrective distribution? Well, if they only made employer contributions, it's possible that they may be able to consider the other contributions that were made as employee contributions that were also converted to Roth. And it's both of those would need to be reported on a 1099-R. So customers could let us know about that so we could prepare the 1099-R. If they really can't justify it as either employee or employer, and they're not able to, for example, raise their self-employment income, right? Raise their W-2 wages to justify those contributions, then you would be in an excess contribution scenario where it would have to be corrected. So we have a good procedure page on our website. I can chat that over. The proposal, though, of just considering it to be after tax wouldn't be a viable proposal because the funds were deposited directly into the Roth. And excuse me, if they were deposited directly into the Roth and the individual has employee contributions that they could make, it wouldn't be considered a pre-tax that was converted to a Roth. Excuse me, it would be considered just a direct Roth employee contribution. So they might be able to justify it as an employee contribution, in which case they would just adjust how much they consider to be a Roth employer, because that Roth employer contribution amount is going to have to be reported as tax deductible on the employer's return for the year for which the contribution is made. And then it's going to have to be reported as taxable to the employee for the year in which it's deposited, which in this case, it sounds like would be the same year. So clients would have to let us know about that employer Roth contribution so we could capture the information needed to prepare a 1099-R, which of course, if they're making Roth employee contributions, it's not reported on a 1099-R. Instead, it's reported on the W-2 for 2025 as a Roth employee contribution. Thank you for letting me clarify that. Hopefully that makes sense. All right, we'll give it a moment here, see if there's any more questions. Well, thank you so much. Please feel free to come back in the afternoon session. And just feel free to join. I mean, you can always find our schedule at mysolo401k.net/webinar. Come to the community, come to these sessions. Okay, all the best, everyone. Take care.